You can threaten tariffs, but the equity market doesn't buy it. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, futures are rising, yields falling as Trump delays tariff orders for now, but he says they're coming.
The president warns of 25% tariffs on Canada and Mexico. As soon as February 1st, the dollar shoots higher.
And meanwhile, President Trump issued executive orders on the border, oil, the military, and the federal workforce. We've got all the details, all of that and more coming up. But let's dig into these markets and where there's trading. We're going to take a look at a cross-asset look right now because we talked about Canada and Mexico, of course, February 1st. But Trump stopped short of China and Europe, which was interesting. Of course, studying options there. You put it into the markets. You can see futures rising on the S&P 500 by about 0.5% right now. The bond market is interesting because yields initially dropped by quite a bit after, of course, Trump didn't come out and put tariffs on Canada and Mexico on day one. Some of that was reversed after we heard February 1st, but still yields down about 7 basis points. And then you take a look at the currency market. This is where a lot of this is playing out right now. The Bloomberg Dollar Index currently higher by about 0.4%. There is a lot of weakness right now, as you would expect, in the Canadian dollar and, of course, the Mexican peso.
I wanted to pull out one product that would be affected by these tariffs if they go into place. This is the price of new cars over the past decade. In 2015, the average new car in America cost $33,500. By the end of last year, the average new car cost $48,800. That's a 45% increase in 10 years. Wolf Research says if tariffs go into place on Canada and Mexico of 25%, that could drive the price another $3,000 higher, another 6% higher for a new car.
Absolutely brutal. And of course, we know maybe a little less competition in electric vehicles, maybe a lot less. We'll talk more about it. Looking at some stocks also pre-market moving. We have earnings season underway. Charles Schwab posted strong results in the fourth quarter. Net revenues grew both on a year-over-year and quarterly basis. Schwab now up 5.4% pre-market, also up pre-market 3M up almost 4%. It expects profit to grow in 2025 as it works through a turnaround plan through cost cuts and new product development. This was a huge turnaround story last year, now showing some signs of life. Apple now down 1.8% pre-market. Jefferies and Loop Capital downgrading the stock. They're citing weak iPhone demand. Matt, you have to wonder if we do maybe one day sort of see those tariffs. When it comes to China, you have to start wondering what it means for U.S. multinationals as well, with a stronger dollar and a lot of offshore activity.
Yeah, actually, I was thinking if you believe that these tariffs are coming, 25% on Canada and Mexico, then you probably want to sell Ford, General Motors, Stellantis. These companies get a massive amount of products from north and south of the border. In fact, 40% for Stellantis, 30% for GM, 25% for Ford. But if you look at the prices in the pre-market on these stocks, and I know GM got an upgrade from Deutsche Bank, but I don't think that's enough to drive it. They're all higher.
Yeah, we need to work on the mind meld because that's exactly where I was going to go. You think about Stellantis, 40% of imported vehicles, but still higher right now. We'll see. So there's where you can see some skepticism. The fact that you take a look at the cross-asset picture and you have different movements in different markets. Obviously, the FX market is taking this seriously when it comes to Canada, when it comes to Mexico. Not as much if you take a look at the U.S. equity market right now. And then you think about that relief rally that we saw in China because Trump, no immediate action on China. Pretty surprising.
Yeah, you have to take stock of where we are day one after inauguration. We have a S&P 500 that ended Friday just below 6,000, going to, looks like, rally above that level now to start off the trading session. To your point earlier, even though you're seeing yields lower, we are still above what we used to call the danger zone of 4.5%, and you are seeing a marginal increase in the dollar. The question is, how far does that go if, to your point, if we see more significant tariff strategy in place?
Right. Well, we haven't seen any tariffs on day one. Let's get more on what we did see. A lot of executive orders and a lot more talk. We're joined by Anne-Marie Horton, Bloomberg's chief political correspondent and co-host of Surveillance. She joins us from Washington, D.C. So, Anne-Marie, Trump did a lot before coming into the White House. We can see that from the truce, for example, is one example in Israel. But apparently he didn't study up enough on Chinese tariffs. They still need to look into it?
I don't know if I would say he didn't study up enough. What I would say is that the team is really looking at the best way to approach this. I mean, take a look at just Scott Bessent's hearing, who's set to be the next Treasury Secretary. He talked about how you should use tariffs in 3 ways. 1, remedying unfair trade practices. 2, used to just generally be a revenue raiser. And 3, a negotiating tool that can be used in place of sanctions. Trump did yesterday talk about, and he was going back and forth with reporters, how he actually likes to use tariff over sanctions. He also talked about the fact that he was invited to China. He wants to maybe make a deal with Xi Jinping. So at this moment of the game, I would say he's using it as a negotiating tactic. What he did want to focus and highlight on, though, when he was talking to reporters, was tariffs on Mexico and Canada. And what's interesting about that is, of course, is that Mexico, Canada, the United States is part of a trade deal, USMCA, and that's up for renegotiation next year in 2025. So I wouldn't say Chinese tariffs are not happening, but they are not here on day one.
All right. In terms of the other executive orders, what have we got? Obviously, he talks a lot about the border, did a lot in terms of immigration, but also energy, the federal workforce. What are we looking at?
Well, there was a slew of executive orders, and I imagine today, even though he will be having meetings with congressional Republican leaders, that potentially we can get even more executive orders. The focus yesterday really was about the border. He declared the border an emergency. And also, when it came to energy, he rolled back a lot of orders we saw under the Biden administration. Most notably, I think for a lot of energy players there, he rolled back the moratorium on LNG permits. So that's really where the focus was. I would say one other executive order that obviously has gotten a tremendous amount of attention, especially if you're someone that likes to use the social media app, is TikTok. Trump yesterday gave TikTok a literal lifeline of 75 days. Now, there's a lot of legal issues at play here because when you look at the law, you're supposed to get a 90-day reprieve if the company, that's ByteDance, was working and was making significant moves forward in terms of divestiture. We don't see that just yet, but Trump yesterday spent a lot of time talking about this reprieve for TikTok and how he wants to do a deal where it would be 50% owned. So that is definitely one to watch. He literally is giving this social media app a lifeline to try to get a deal in place. And, of course, Bloomberg had reporting recently that China is looking at maybe Elon Musk being one of those individuals they would potentially like to divest with.
All right. Well, I will certainly be watching closely when it comes to TikTok. It was an emotional weekend, Anne-Marie, at least when it comes to my social media
Not
diet.
for me.
All right, Anne-Marie, great reporting as always. That is Bloomberg's Anne-Marie Hordern in Washington. Let's bring in now Morgan Stanley Senior Portfolio Manager Andrew Slimmon joining us. And we were just talking about how you take a look across asset class. It seems like markets are taking the tariff threats with varying degrees of certainty. What is your read on day 2 of the second Trump administration?
Well, you're exactly right. It's very hard to figure out exactly what's going to happen. On the surface, a administration that's clearly wants to work with corporate America, I don't see how that's not, a positive for equities. But what Matt mentioned, I think, is very interesting, which is if you look at there are baskets of stocks. There's the Trump tariff losers, companies that have the perceived as imports from, manufacturing China, Mexico, et cetera. That basket really hasn't done that poorly. It's on Bloomberg. There is the Doge risk losers, which Department of Government Efficiency, perceptions of companies that would lose if there's big cutbacks. That basket's done terribly. So the market is telling a kind of a very different narrative than what, kind of the headlines are. And, I think the answer is we'll just have to see. But again, I think what we do know is a administration that clearly wants to work with corporate America. I just don't see how that's not a net positive.
Andrew, let's harp on the Doge basket for a moment here, because you are already seeing one man who is really supposed to be overseeing the charge here going to pursue other political aspirations. Of course, that is Vivek Ramaswamy as one of the co-leaders of the Doge effort. There's also the fact that you have had...
We should make that clear, by the way, because I don't think a lot of people know that.
That he's running for Ohio governor?
No, that he's left Doge.
Oh,
yeah.
Right? That news literally just came out.
He also hasn't confirmed that he's running for Ohio governor. He said that he'll have more to say soon about his future plans in Ohio on Monday.
Political aspirations. But the undertone there, of course, yes, is that he is being looked at as a Ohio governor aspirational here. So when you look at Doge and also the U.S. government's efforts to really keep the economy as strong as it is, do you think that's really possible with significant cutbacks?
Well, the thing that's interesting here is you accelerate GDP growth, you improve the deficit. If you have a little bit of a deficit cut, that makes for a good math. I think what's important as a portfolio manager, I'm trying to figure out where to place my bets. I think there are areas that are going to come under scrutiny, and the stock market is going to anticipate that prior to any actual announcements. It's one of the reasons why, as much as healthcare has been a real laggard and some of the stocks look cheap, we continue to have an underweight, because I think that would be an area that will continue to come under the microscope.
I want to first point out that we say the great state of Ohio whenever we mention, especially after last night.
Yes.
I'm sure you saw. Thank you very much. The Ohio State Buckeyes, best football team in the nation, national champions. Congratulations to those guys. Andrew, what do you like in this market? I mean, you point out, and a lot of people point out, this is a year where you should look at individual stocks or baskets of stocks, as you put it. So which baskets do you find most interesting in 2025?
Look, on the surface, Matt, we've had 2 great years in a row, 20% returns. And I think, it's hard to be as optimistic going into 2025 as previous, simply because there is a lot of optimism out there. But I don't think we're kind of at that euphoric state yet. I heard on your, the previous hour, talking about more corporate finance activity coming this year. I think that will be positive for the equity market. So I think we're later stages of a classic bull market, but we're not at that euphoric stage. And in later stages, you get more volatility. And I hate to say that, because every year, no one comes on these shows and says, oh, it's going to be a low volatility year. But you tend to. And in that case, I think as much as everyone, I hear people over and over and over say equal weight is going to outperform cap weighted. I'm not sure when you get these drawdowns, people won't run right back into the mega cap tech stock. So I wouldn't be underweight the big guys in technology land, because I think there is a chance that we are just on the cusp of the AI understanding how corporate America is going to deploy artificial intelligence to save money, improve margins. And that reminds me of kind of 1996, 97, when the market went on to 3 more years of great returns because we were just starting to understand the internet. I wouldn't bet on the big guys that are going to be right in the crux of this. Flip side is I like financials. So I think it's a balance of value and growth, but I would avoid, and I've said this now for a year and a half, I'd avoid kind of the defensive areas that you buy in front of a bear market. I think it's still too early, but it's not as early as it was a year ago.
Andrew, you certainly got that call correct last year. Looking forward to seeing what 2025 brings us. That is Morgan Stanley Senior Portfolio Manager Andrew Slimmon, who, by the way, guys, said don't count out the financials. I know they bore you sometimes, but they're still alive and well.
Never boring, the financials.
He did say to barbell that with big tech, though, in a haven.
The Goldman Sachs story today I find absolutely fascinating.
Yeah, what is that?
The kids are moving on up.
Something about management changes.
Promotions. Anyways, coming up, we're going to go to the Magic Mountain. We're going to head to Davos, Switzerland, where we're going to bring you a one-on-one interview with the CEO of Commerzbank. This is Bloomberg. World leaders in Davos this week for the World Economic Forum. Bloomberg's Jomana Bersecci is sitting down with the CEO of Germany's Commerzbank. She joins us now. Jomana.
Sonali, thank you so much. Well, yes, the banking consolidation theme is one of the major themes over here in Davos. I'm really happy to say that Bettina Orlopp, the CEO of Commerzbank, joins us. And there is a bit of a takeover battle going on right now for Commerzbank. Earlier today, our colleague Francine Lacroix sat down with Andrea Orchel. Wide-ranging conversation, but essentially he did signal that they're willing to walk away if they don't see value in the takeover. Do you feel relieved when you hear that?
Well, what do? We really focus on our own strategy, on the implementation. We deliver the results. We are now heading our Capital Markets Day mid-February, where we will present an upgraded strategy. We will present our 2024 results, which will serve as an excellent basis for 2025. And we always said that if UniCredit wants to put a proposal on our table, we will evaluate, but nothing is on the table, so we focus on our own strategy.
Yeah, what are the types of concessions that you're looking for from UniCredit then that would convince you?
Well, I think, first of all, there must be a draft proposal which we could discuss, and then we could compare notes and we could move further. I think that is a prerequisite we're looking for. And until then, it's very much we stand alone.
Any specific share price you have in mind that you want to reveal to Bloomberg Television?
No, we are constantly working on improving our share price. We just completed our share buyback program today, the first tranche. We have applied for the second one. We expect approval in the next weeks, and then we will continue with that. So we will have a very attractive capital return for 2024. And then we will hopefully have some promising plans for everybody presented during Capital Markets Day. And our intention is to bring the share price up, to deliver sufficient capital return, and then automatically target prices, and also share price will follow.
It does seem to me that you're open to the idea if a proper offer is given to you, as you just said, as you indicated. What about other M&A to fend off the approach? Would you consider a white knight?
Well, we always said that we would not do stupid things and that we would really concentrate on value creation. And therefore, we evaluate certain M&A options for ourselves, but that are really bolt-on acquisitions, smaller ones, to make our value proposition better. Besides that, we always said that we would act in the interest of our stakeholders, and that's what we do. And therefore, we believe that we have a very good strategy, and this is why we focus on that.
What is the business case for Commerzbank staying standalone?
Well, I can't reveal the numbers which we will present on the 30th of February, but I think we laid out already end of September some very attractive numbers, which means that already with the strategy 2027, we said we will achieve a 12% ROTE until 2027 with very attractive capital return, and that is a good starting point, I would say, and we take it from there.
You're going to be setting out these new targets on the Capital Markets Day, but of course the macro environment plays a big role, and I just wonder, looking ahead, ECB easing, this is going to be a year where the European economy is facing many headwinds. Interest rate cuts are anticipated to follow. What does that mean for your business and your ability to generate a higher return on tangible equity?
We take the macroeconomic environment into account, that's clear. So we anyhow plan with a very modest GDP growth for Germany. I think it can hopefully only get better, most likely after the election, dependent on the outcome of the election. We also assume that interest rates will come down to a significant amount. So we calculate with that. On the other side, we want to grow in net commission income quite significantly. We will stay very disciplined on the cost side, and we have a very well-diversified loan portfolio, so we are also not afraid of the risk result.
You mentioned the German elections coming up. How do you think the potential new administration could influence the financial sector in Germany right now?
I mean, it's clearly dependent on who will win. I think we all hope for a clear vote and a clear majority. I think that is the most important thing, and that then the new government, whoever it will be able and willing to implement fast reforms, which we all have discussed. So they are on the table. They just need to be implemented. And that will be also very important for the financial sector, because it will be very important for our German corporates. Regarding the attitude of the German government or the politicians regarding credit, I think they have made their own statements on that.
Yeah. I'm not going to ask you about the German government's position on the takeover, but what I do want to ask you, though, is the regulatory landscape. I was on a panel earlier today at the World Economic Forum speaking with some senior bank executives, and it really does feel like there's regulatory divergence opening up between some of the loosening up of regulations in the US, the watering down of the Basel III endgame. In the UK, the decision was postponed until 2027, but in Europe, Basel III has already been implemented. Do you feel like you're at a disadvantage versus other banks around the world?
Yeah, I mean, we clearly also advocate for rethinking and reconsidering at least the further implementation, be it FATB or some of the other rules which will come into play, like for the unrated corporates or also the output floor. So we think that EU needs to consider to also adjust the plans, given what the US and the UK what they're doing, and yes, we are supporting that. And our the signals we receive, at least, is that there's a willingness in Brussels to also think about reducing the complexity of our regulation, and I think that would be a very good signal.
I'm going to round up with perhaps an existential question. If this full takeover does eventually happen, is that a reflection of a healthier banking system within Europe because it has allowed for cross-border consolidation?
No, unfortunately not, because it's rather a domestic consolidation, because the benefits of such a acquisition would come really out of the combination of two German entities. For cross-border consolidation, which I'm also a big supporter of, we need a banking union. For the banking union, we would also need a capital market union, and we also need a unified deposit protection scheme. So we need to do first some other things, and then we will also see cross-border acquisitions and cross-border M&A across Europe.
Bettina, thank you so much for your time today. Guys, that was Bettina Orlopp, the CEO of Commerzbank.
Yeah, great to see Bettina there in Davos. Jumana, thanks very much for that as well. You can watch all of the Bloomberg interviews and panels from Davos on your terminal. Just type LiveGo, L-I-V-E, go on the Bloomberg. Katie?
Meanwhile, we'll take a look at markets, of course, counting down to that opening bell. You can see we have a rally to start this holiday-shortened week. The S&P 500 up about 0.4% right now. It's big tech that's doing a little bit better. Of course, you had a bunch of big tech CEOs at the inauguration in a chilly Washington, D.C. yesterday. The NASDAQ 100 up about 0.5%. It's the small caps that are in the lead this morning, though. The Russell 2000 currently higher by about 0.8%. Of course, we are seeing Treasury yields moving lower right now across the curve, but particularly on the long end as well. That is giving a bid to those little companies that populate the Russell 2000. Of course, the Fed is in a blackout period right now. We know that we also have a Fed decision coming up.
Come on, blackout period.
Yeah.
I love that throwaway statement. Like, it's so meaningless, right?
What do you mean? They can't talk.
Yeah, but then you just leak something to the Wall Street Journal if you want the market to know what you're talking about. Also, if you make an announcement,
change your mind within the days in between.
That's true.
If you make an announcement on Bloomberg Television, or if you say something in the New York Times, you're talking to all investors. That's perfectly legal and legit.
Here's some good news no matter what. You are seeing the 10-year still stand above 4.5%. That used to be a danger zone, and the market is healthily swallowing it and rising yet again.
It seems like this is now a rate of change, direction of travel market rather than outright levels, at least for today. But coming up, less than 4 minutes until that opening bell, we'll discuss what's going on in this market with RBC's Lori Calvasina. That conversation up next. This is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at a market at futures that are higher, even after a warning that Donald Trump could put tariffs of 25% on Mexico and Canada, our biggest trading partners. But that wouldn't come till February 1st. China, he says they need to study a little bit longer. So the markets are relieved that we didn't get tariffs yet, up 0.5% in terms of futures. You can see and hear the bells at the New York Stock Exchange and the NASDAQ. I know the NASDAQ market site right now is a real estate brokerage holding company that's celebrating growth, but the stock is down 25% in 2024. Down at the New York Stock Exchange, we have Venue ringing the bell at the New York Stock Exchange there, and they have interesting little scarves on. In terms of the major averages, it does look like we're going to go higher today, even with a stronger dollar, because we have yields lower. Katie, what do you see in terms of the live trade?
Yeah, real push and pull when you take a look at the FX and the rates market. But at least in the stock market, the direction of travel is higher right now. The S&P 500 currently higher by about 0.5%. Same story, too, if you take a look at the NASDAQ 100. The small caps really enjoying that relief that we're seeing from lower rates, at least for this morning. The Russell 2000 higher by about 0.9%. You take a look under the hood, it's earnings season really kicking off. And we had manufacturer 3M expecting that profit will grow in 2025 as it works through a turnaround plan through cost cuts and new product development. Remember that 3M pivoted in mid-2024 after it saw a slowdown in sales and added waste across the organization, maybe starting to bear fruit right now because shares currently higher by about 3.5%, Sonali.
Also interesting moves over here in the financial sector. Schwab climbing well after posting strong growth in the fourth quarter. Schwab now up 3.5% as the market opens. New brokerage openings jumped 23% year over year. Total client assets top $10 trillion. Matt, the retail trade alive and well.
Yeah, absolutely. And Schwab is a great predictor of that. I'm looking at Walgreens after the Department of Justice sued the company for allegedly dispensing opioids and other controlled substances at pharmacies across the U.S. while ignoring red flags that the prescriptions were likely illegal. I say allegedly, that's going to have to go to court, but investors don't like it and they're selling off the stock today. Katie?
All right, let's broaden out this conversation because joining us at the desk, I'm pleased to say, we have RBC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina. Great to see you in person, Lori.
Great to see you guys, too. Thanks for having me.
So it's day 2 of the Donald Trump administration, the second time around. There's still a lot we don't know, of course. We saw some opening volleys when it comes to tariffs on China, or rather on Canada and Mexico. Haven't heard details on China. But let's talk about where sentiment stands as we really head into this administration. You write about the AAII net bulls coming in 1 standard deviation above the long-term average, but a bit of a sentiment shift underway right now.
Yeah, so that survey is one that we watch very closely because since 2022, when it's gotten a little overheated, it's really helped identify all the 5 to 10% drawdowns that we've seen. And it's only had maybe 1 false signal, which is even kind of questionable as to whether that was a false signal or just a little bit early. So what we saw was that basically back in October, we hit that 1 standard deviation mark again, and we've been pulling back ever since. And it's been kind of slow and halting. And we finally have in recent weeks made a break into negative territory where the bears have overtaken the bulls. And you've had last week, I think the data point was maybe minus 15% or so in favor of the bears. We tend to watch the 4-week average, and it's not fallen quite that far. But you're starting to sort of look at it and say, okay, we might hit 1 standard deviation below the long-term average, which is where when we had that big drawdown in the fall of 2023, it bottomed out at. So, we think that sentiment was just too frothy, took a much-needed hit, maybe getting close to levels. It's sort of interesting watch to see the market kind of rallying back today. Maybe it's interrupting that drawdown that was very sorely needed. We didn't quite hit 5% to the downside. It wasn't quite a technical, kind of pullback, but it's been, sort of softening from euphoria.
At the same time, you're seeing improvement as you've written in flows into bond funds, global equity funds, non-U.S. funds. These are places that have been choppy.
Yeah.
Even bonds, that kind of idea here that you can be stable at 4.5% on the 10-year is in question. Do you think that those are reasonable places to start chipping at yet, given the uncertainty that's still ahead?
My December marketing, when I was out seeing investors, I was in Europe for a week, and not a single European investor made a case for me for Europe over the U.S. Now, I did hear a little bit about that in early January, but that's very unusual. Usually, even if Europe's been performing poorly, I get some contrarians who want to make that bet. And so I do think that Europe in particular and kind of the whole, U.S. exceptionalism, don't buy anything outside the U.S., I think that just got overdone. And if you look at the EPFR data, we are starting to see those European outflows getting less negative. Other geographies are perking up. U.S. equity flows have stumbled. Really driven by passive strategies, so it does seem to be fast money. But it's been not a huge rotation, but I think it's been mild, it's been gentle. And I do think Chanelli's right. I do think it makes sense to sort of look at the other side of some of these things.
Yeah, I mean, if there aren't even any contrarians out there, you've got to take at least a look. By the way, we have a chart, I think, on the dollar. The strength has been notable, let's say, right, if not expected. Does this, and this is only 3 days, but it's much more interesting if you take a look at a year or
we were higher. We were higher.
Yeah.
I know it's higher today, but I'm just talking about the longer term trend is the dollar strength is pretty notable. Does that make any difference in your investment strategy?
So it doesn't really impact our earnings numbers per se. What it does impact is earnings sentiment. So if you do a chart on like the dollar versus earnings in terms of actual dollar trends, you're not going to see much. But if you look at the rate of upward revisions against the strength of the dollar year over year, you will see an inverse correlation. So when we go into reporting season, if the dollar's been on a tear, we're usually on guard for some downward revisions. Areas like financials, which we're in the thick of right now, they don't really get affected by that. Utilities, REITs, some of these more domestically oriented sectors, things like industrials, materials, the consumer sectors, they tend to really have some negative dollar exposure. Tech companies and healthcare companies also tend to talk about this issue a lot when it comes up. So that's one of the things we're on guard for in the next few weeks. Are we going to see companies really talking about this issue? And frankly, sometimes I think companies blame more on the currency than they should, and it kind of covers up other problems. We'll see if that happens. We haven't heard it yet, but we wouldn't have when we've been all financials focused anyway.
It's a convenient excuse, right? Just blame it on the strong dollar. But
it's got to be true, though, right? If you're a food and beverage company selling into this internationally,
yeah, I'm sure there's some truth to it that you can then embellish, of course, and maybe it makes your numbers look a little bit better. But let's talk about earnings season overall. An interesting point out this morning that if you take a look at analyst earnings sentiment, it's been getting more pessimistic as we get closer to reporting season. You take a look at S&P 500 revisions momentum, it's actually been below zero for the longest stretch since the beginning of 2023. Are we setting up for maybe actually a little bit of a bounce if we surpass those low expectations?
I think certainly with financials, I always joke internally that when financials are acting well going into reporting season, it's never going to end well. When they act poorly, it's a little bit better. And they weren't really the leadership area at the end of the year. You saw some of that momentum fade. So I think that was actually a good setup for them. I go back to last year. If you look at guidance data, and actually Bloomberg does a good job of tracking this, the guidance that was issued was there was a big spike in guidance to the downside during calendar 1Q24, so the reporting season that we're in now. And I think companies last year did a good job of keeping expectations low. I have not seen that same spike in downward guidance yet. We may get it. We may just not, know yet. That's something else to watch for. But I have noticed that 2025 bottom-up consensus numbers for the S&P have been coming down for operating margins in particular. And there's been sort of it's not like a hugely negative tone on costs, but it's been a little more negative than what we'd seen in prior quarters. So I feel like companies have been sort of sneaking it in recent quarters and kind of dialing down the expectations a little.
The reason I love earnings season so much is that it does come down to the numbers, and you see a market that feels like it's been trading so much on feelings, on good feelings of pro-growth under the Trump administration, of lighter regulation. But when the numbers come through at the end of the day, what's the biggest downside risk to what we might see?
So, I think margins are one. Like, I just know my numbers versus consensus. I've got more conservative margin assumptions, and even though they've been dialed down, they're still decently lofty in the consensus. I don't know if it's necessarily the biggest risk, but I am watching to see what companies say about the health of the consumer, and everything the financial said was pretty good. But if you look at the University of Michigan sentiment survey, you're seeing big divergences by income, by gender, by education level. The vibes are not all trending in the same direction.
I don't think we say gender anymore. It's been mandated now.
There's two of them in America now.
That's sex, right? Gender.
No, you said specified gender.
But we don't have to go into this right now.
I'm not, as my grandmother would say, I'm not touching that with a 10-foot pole. But we are seeing in that Michigan survey, the people are feeling different things. And when we look back over the past year and a half, companies have really been coming in and saying, look, the high-end consumer is resilient, the low-end consumer is weak, and overall the hard data has been looking more like the high-end consumer. So so I think it's just going to be interesting to see if these shifts in the Michigan survey, are they showing up in any of the consumer company commentary? Maybe, maybe not. The financials all told us that business optimism is strong. So we'll see. It's going to be an interesting debate.
All right, Lori, great having you on the program. Thanks so much for joining us. Lori Calvasina there from RBC. Coming up, we will head back to Davos for a conversation with the central bank governor of Israel. In the meantime, we continue to get headlines on a brewing trade war. Trudeau, north of the border, saying he supports the idea of a dollar-for-dollar retaliatory tariffs. We'll continue to bring you headlines as they come across. This is Bloomberg.
Welcome back to Bloomberg Open Interest. Let's take a look at markets right now because we're pairing those gains that we saw right at the open. You can see the S&P 500, it's still higher by about 0.4%. Keep an eye on big tech, though. You can see the NASDAQ 100 still higher by about 0.1%, briefly erasing losses. The Russell 2000 holding in steady right now. We have gotten some movement when it comes to the tariff front. We're hearing, of course, from Justin Trudeau saying that Canada is ready to defend Canadian interests if the U.S. does tariffs. He's a bit of a lame duck right now, but we also heard from Claudia Sheinbaum, of course, the leader of Mexico, saying that they're waiting to start formal talks with the Trump government and that Mexico must keep a cool head on Trump orders. That is according, of course, to Claudia Sheinbaum. We'll see how that develops when it comes to the equity trade. But right now, we're still higher, Matt, but pairing a little bit.
All right, let's get back to the World Economic Forum in Davos, Switzerland. Bloomberg's Lisa Abramowitz is sitting down with the Bank of Israel governor as his government works through a ceasefire with Hamas. Lisa?
Thank you so much, Matt. Yeah, I am here with someone who has been at the forefront of one of the biggest stories that we've seen, aside from the inauguration, and that is the ceasefire between Gaza, Hamas, and Israel. He is the head of the Israeli Central Bank, Amir Yaron. He is here in Davos. Thank you so much for being here, Amir, and I love catching up with you. I want to start with the idea of this ceasefire. And as somebody who oversees the economy in Israel, how much are you ratcheting up your expectations for economic growth as a result of this ceasefire?
Let me put a perspective. We just had an interest rate decision with a forecast which already took into account that basically after the first quarter will be on what's called just ongoing security with intensity of fighting substantially coming down. And we expect the growth rate for Israel for 2025 to be around 4%, and in 2026, 4.5% under that scenario. Now, obviously, we want to see all the hostages come back, and I hope the ceasefire is even a bigger turning point in the sense that we'll see after this horrible 7th of October day and the suffering on both sides sort of go away. But this can pave the way to regional arrangements. And if they are sustainable, they can facilitate rehabilitation, and they can, if they are provide sustainable security arrangement, they will promote growth, economic growth, and not just for Israel. They will promote growth for the region at large.
It sounds like you're skeptical that this really marks the end. It sounds like you're preparing, at least in terms of the economic outlook, for this to be maybe the end in extreme ongoing hot war scenario, but that the ongoing conflict isn't going anywhere for a while.
I'm not a military expert, but you know, our baseline scenario already incorporated the intense fighting is going to come down in the first quarter, and we're going to have sort of perimeter ongoing security. But the more there is ceasefire, and obviously I'm elated about the hostages that already came back, and we hope all of them will come back, to the extent that that paves the way to more sustainable regional arrangements. And hopefully they can be backed by powers from the US, Europe, and others in the region. That will provide both security, it provides certainty. We know that economies want certainty, they don't like uncertainty. That by itself will promote growth. It will certainly help Israel, and if that's the case, we'll might have growth even higher than the numbers that I've just advocated, but it'll help the region at large.
Is your expectation that the baseline of economic growth is going to be faster or slower than pre-war, based on demographics, based on whether people move there or move away?
So maybe just a step back, I think Israel, the economy, has shown what it has shown in the past, a lot of resiliency. The economy, also the people in terms of their determination, although this year we've grown only 0.6%. We anticipate, as I said, we're going to grow 4 and 4.5. We anticipated in the past that we were going to grow somewhere around 4%. That was sort of our long-run trajectory. The issues Israel's facing in terms of after 26 in terms of its growth include things like investment in infrastructure, investment in education, making sure the ultra-Orthodox that have a growing presence in our population are in the labor force. We also need them as this ongoing security requires more manpower, so to speak. We need them to be drafted because that also has cost. All these things are needed. They will impact Israel's long-term growth. And of course, again, if there will be regional arrangement that will subside a lot of, the risk premium around, that will help Israel resume back to its potential growth, which was around 4%. But right now, if you look at our estimates for our debt, which for us was very important, and the government did take a lot of actions to do fiscal adjustments, painful for a lot of the Israelis, 1.5% of GDP. Debt is supposed to go to almost 70, but afterwards, we have a trajectory in which it will decline. So in order for all of this to happen and for growth to continue, we need to make these structural changes in the economy.
How constrained do you feel, and I say you more generally, the government, in order to spend more on things like security, on defense spending, which is something that has come up quite consistently, at a time when there is this push to get down the deficit and when interest rates globally are higher than they have been?
So you hit the nail on its head in the sense that I said we need all these investments on the one hand. On the other hand, we want to maintain the confidence of the market and show that we don't have a diverging debt. And right now we've taken some steps to do that. But that means the blanket to manage these things and at the same time having debt that doesn't diverge and indeed has a trajectory that shows our continuous responsible fiscal standing in the markets. That is a bigger challenge now after the war and with more security costs.
Well, we're all very grateful that the ceasefire is in place and hope that it does become a better situation going forward. Amir Yaron, who is the head of the Israeli Central Bank, thank you so much for being with us today.
Thank you, Lisa.
All right, I'm going to send it back to you. Matt, Katie, Sonali.
Lisa, thank you so much. That was Bloomberg Lisa Abramowitz with the Bank of Israel Governor Amir Yaron. Now you can watch all of the interviews and panels from Davos by typing LIVE GO on your terminal. This is Bloomberg.
Welcome back to Bloomberg Open Interest. You take a look at the stock market right now. The story is the same. The lines are higher. The color is green. The S&P 500 up by 0.4%. We have paired some of those gains, though, especially when it comes to the NASDAQ 100 up about 0.1%, briefly going negative, and it had been higher by 0.5%. The Russell 2000 actually extending its gains right now. The small caps enjoying quite a rally to start this week, up by more than 1%. But let's go back to the NASDAQ 100 because you take a look at what the biggest decliner on a points basis is. It's Apple. Apple obviously having a tough morning right now, down by about 3.7%, hit with a double downgrade this morning from Jefferies and Loop Capital. The reasons cited by the analysts were weak demand for iPhones. We also got research out this morning showing that sales of iPhones dived 18.2% in China during the December quarter. So It's going to be fascinating to see what happens with Apple. Of course, one of the main drivers of the stock market when you think about the sheer size of Apple. But over the past year, it's only higher by about 16% on a total return basis. Obviously, it's been lagging.
Was Tesla down there? Did I just see Tesla?
There was also Tesla
is
on that
down
board.
right. So it's interesting.
Vehicles.
Well, Piper
Sandler.
Sometimes I say Piper Jaffray, actually came out with an updated price target on Tesla. No longer $315, and thankfully, because they've blown past that.
Yeah.
Now $500 is the price target from Piper Jaffray. Interesting to see that Tesla down so hard because it was up in the pre-market. And obviously, Elon Musk was such a big part of the inauguration yesterday.
Yeah, I want to pivot to more bigwigs on Wall Street as well, because another story that's been out on the terminal is that hedge funds have been long regarded as notoriously expensive. Interestingly enough, the market is finding ways to add more of them this year with markets near all-time highs. But this is how costly they truly are for their clients. According to LCH, guys, they have kept roughly half their gains. So of the $3.7 trillion in profits since 1969, nearly half of that went to fees.
Yeah, this story to me is insane. Now, to be fair, the data goes back to 1969.
It's a long time ago.
However, taking more than 50% of the wins as your fee seems like greedy?
There's a great quote from Warren Buffett in this story. Of course, he once described these fees as a compensation scheme that is unbelievable. Still going on, though.
It's interesting, though, that the rankings are changing. Also, D. Shaw last year was the most profitable of all the funds, beating out Citadel and Millennium. Citadel still the most profitable since its launch.
All right, we come back. We're going to go back to Davos and talk to Alphabet's Ruth Porat. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
Coming up, President Trump jolts markets with the tariff threat and a barrage of executive orders. Stocks are rising, yields are falling, and the dollar is higher.
Political leaders and top executives from around the world react to Trump's return. This hour, we're going to hear from Alphabet's president and chief investment officer, Ruth Porat.
And Netflix takes the earnings spotlight. Wall Street optimistic that the company will get a boost from live events and sports when it reports after the bell today. All of that and more coming up. Let's get a check on these markets right now. Of course, still holding on to gains for the S&P 500. The NASDAQ 100 also higher by about 0.1%, giving back the momentum that we saw pre-market, but still the color is green. You take a look at the bond market right now, yields currently down about 5 basis points. We were down 7 basis points about an hour ago, but still that 10-year treasury yield below 460 and then some, Sonali.
I also want to bring you some breaking news. Brevin Howard is cutting 7% of hedge fund trading staff worldwide. This comes after some large rivals have done the same. The cuts affect roughly a dozen traders from offices globally, New York, London, and Abu Dhabi. And this comes after performance had lagged its rivals. Though remember, even funds that have been up meaningfully, say Bridgewater up double digits, have also cut around 7% of staff as these firms remain nimble, Matt.
All right, we are going to continue to follow those stories for you, but right now I want to go back out to Davos, Switzerland, to the Bloomberg House at the World Economic Forum. Eric Schatzker is sitting down with Alphabet's president and CIO, Ruth Porat. Let's listen in.
Government on AIG, Fannie and Freddie, and you were the CFO at Morgan Stanley as well. And I mention this because I'm going to come back to it a little later in our conversation. In the meantime, help me out on a personal level. What do you hope for most out of this kind of political, at the very least, political reset that America has experienced with this election?
You know, I look at it really at this point through the lens that we're all privileged to live in a time where AI can be applied not just to economic upside, but when you look, for example, at what we're able to do to address some of the really big social imperatives around healthcare delivery, around education. You know, notably, my colleague Demis Hassabis, when he won the Nobel Prize, was awarded the Nobel Prize last fall for AlphaFold, described as the single greatest contribution to drug discovery with our colleague John Jumper as well. But he was asked in his Nobel speech, and he said what really motivated him and what motivates him is solving the most intractable problems. And when you think about the application of AI to health as an example, early detection saves lives. At Google, we have pioneered early detection of metastatic cancer, lung cancer, breast cancer. We're doing it with diabetic retinopathy. These are really exciting. So when you say, how is this administration going to open new opportunities? What are we going to land? There's a whole swath. If you want, again, go back to the opening comment. They have said tech is an asset. We want economic growth. We want to cut through inefficiency. These are opportunities. And on the inefficiency point, it's one I get pretty excited about, as you probably would imagine. There's tremendous inefficiency across public and private sector. One of the questions...
You don't say.
Who go figure, except at Bloomberg. One of the questions I'm most often asked by finance ministers is they say, I'm not going to get more budget. How do I make my budget work better for my constituents? How do I unlock it? And there are so many examples with tech, which of course is what the Trump administration wants to do as part of DOGE. But I'll just give you one that I really like. We did this in the state of Minnesota, done it in a number of places. They said we need to be able to deliver better for our constituents, payments and other responses. So implemented our AI-based customer support. And they initially said we have 4 critical languages in Minnesota. Can you help us do it in 4 languages? Google Translate, we have 260 languages. 4 languages was no problem. 6 months later, they wanted to add another 26 languages. And I just, when I'm meeting with heads of state from around the globe, they have a similar set of questions. And it's fascinating where they'll say, I can't actually deliver education to kids without Google Translate. So the ability to deliver services is all part of what I think we're going to be able to see across what the Trump administration intends to do, but more broadly.
You mentioned DOGE. No one appears to wield more influence at the moment over President Trump than Elon Musk. And I'm curious, I know other people are curious because I've talked to them about this. Is having Elon so close to the president on balance a positive or a negative for the tech industry?
For the tech industry, you're not saying for the country. An interesting question.
Well, but that might be where I'm going next, Ruth.
Okay. I think about it in the context of the country. Look, the reality, I just said
For the planet? For the universe?
For Mars. So, look, he is an extraordinary innovator and entrepreneur. Few like him. I think we all know that. We're at Google very involved with quite a number of the businesses that he's incubated and built. SpaceX is a great example, and what an extraordinary accomplishment that is. Anybody who has not used Starlink has to try Starlink. And so to have somebody at this time where you're trying to unlock the potential for AI, it is not a foregone conclusion that each one of us, public and private sector, will radically rethink what we're doing in a way that gets the trillions of dollars of GDP upside. That is work to do. So to have somebody who is such an entrepreneur and broad thinker will be an unlock, and to understand that technology is a critical part of both productivity and social service solutions has to be an asset.
He can be a mercurial guy, and he's a little unpredictable at times. Some describe him as a little unfiltered. That can all be considered positive or negative, but beyond what he might help to unlock in the way of opportunity for tech, to your point, for the country and perhaps more broadly for the world, are the ideas that Elon is bringing to not just President Trump himself, but those around him in government, healthy?
You're talking about a broad set of
sure
issues.
am.
I know. I'm going to stay in my lane, which I tell people all the time, stay in your lane, and I'm going to stick in the tech lane. So there are solutions that should be implemented. Each one of us needs to implement it, and I will leave it to others to go more broadly.
How about for Google? You mentioned that Google and Alphabet work collaboratively with some of Elon's companies. He's also a competitor of yours in a couple of other areas. He occupies a unique position right now with influence over government policy that affects the companies the industries, that he's in and that you're in. Is that a risk?
Well, let me take one of my favorite examples of something important that we're working on, and that is Waymo, self-driving cars.
Right.
And he's clearly.
All right, and that is Bloomberg's Eric Schatzker in conversation with Alphabet's Ruth Porat at the Bloomberg House in Davos. You can continue to follow that conversation by going to Live Go on your Bloomberg terminal. And at 11 a.m. Eastern, catch an interview with Bank of America Chairman and CEO Brian Moynihan. But back here on Open Interest, it's earnings season. So let's get a look at what's going on in the stock market with Bloomberg's Bailey Lipschultz. And we'll start with 3M having a great start to the week.
Great start to the week. This is a stock that has outperformed the S&P 500 on a 12-month basis by more than double, returning about 68% versus the S&P about 26%, beating expectations, still trying to turn around that business. This is a company that has spun out some of its businesses, trying to really righten the ship, and the CEO really focused on driving profitability. They forecast better than expected profitability, adjusted earnings coming in ahead of what Wall Street was looking for. Really across the board, a strong print from the company as we continue to see kind of trying to put the quote-unquote forever chemicals issues in the past for a stock that is among the top performers in the S&P 500 this morning.
Also interesting, you're watching the trade in Schwab building throughout the morning as well. What is Wall Street really chomping on here in terms of performance? The gain today is as good as you saw for the whole of last year.
Yeah, this is a stock that when you step back and look at where it was back in 2021, back pre-SVB fallout, and the kind of mini regional bank crisis, still trying to recoup those highs. But this is a company that beat expectations on revenue. They saw total client assets topping $10 trillion for the first time in quite some time. They're integrating their merger or their acquisition of TD Ameritrade. This is a company that, again, for the moment is firing on all cylinders, the top performer in the S&P 500. But again, when you kind of step back and look at what the broader financial space has been doing, relatively underperforming. Again, not near those 52 or even all-time highs. Yeah.
I like how you corrected yourself from merger to acquisition. Right?
I know. Well, you don't like merger Mondays.
There's no such thing as a merger.
He knows his audience.
No, exactly.
Let's talk about Apple, because it already had been having a tough month, right? iPhone sales may be a disappointment, and now we're getting more analyst downgrades.
Jefferies and Loop Capital both downgrading shares, as you mentioned, right now down 3.5%. So far this year, down 11%. iPhone risk, uncertainty around people wanting to upgrade their phones. I don't know about you guys, but I find it a hard sell to buy a new phone with the idea that Apple Intelligence one day is going to be integrated, and that's really what we're seeing. Also calling out weakness in China. That has been such a key story across the market. How has the Chinese consumer been? It does seem like those sales are falling short of expectations, but it's going to be a big earnings season.
For now, I just want consistent chargers, let alone Apple Intelligence.
I was going to say my iPhone has to disintegrate in my hand before I will upgrade it. Bloomberg's Bailey Lipschultz, it's great to see you. Apple, of course, the biggest downside contributor on a points basis to the S&P 500 and the NASDAQ 100 right now. And speaking of big tech, coming up, Netflix results due after the bell today. Rich Greenfield, he is Lightshed Partners media and tech analyst. He joins us next on What to Expect. This is Bloomberg.
Let's get now to high interest and look at what's making headlines around the world. Dangerous winds and drought will create an extreme fire risk across Southern California today. A rare and dangerous red flag warning has been raised across the region. Wind gusts as strong as 80 miles per hour are forecast. Ventura, Malibu, and San Fernando are all among the cities the most in danger. And Vivek Ramaswamy has reportedly stepped down from co-leading President Donald Trump's Department of Government Efficiency with Elon Musk. Ramaswamy is instead said to be planning to run for governor of the great state of Ohio. The current governor there, Mike DeWine, selected his lieutenant governor to replace VP J.D. Vance's seat in the Senate. That opened the possibility for Ramaswamy to seek the governor's mansion in 2026. And Ohio State, the Ohio State University, beat Notre Dame to win the national championship in college football. The Buckeyes winning their first title in 11 years after a 34-23 victory against the Fighting Irish. It was fantastic, but I only stayed up for the first half because I had to be here early. Netflix is going to report its latest results after the bell today. Expectations are high after its Christmas Day NFL games and season 2 of Squid Game. Joining us now for a preview is Rich Greenfield, media and technology analyst at Lightshed Partners. Rich, What should we be watching out for the most? Is it the number of people who tuned in to Squid Game and the aforementioned NFL?
No, look, I think what really matters is how is this content continuing to drive the business? You know, their content slate really started to pick up as you moved into the tail end of Q4. Netflix has been pretty honest, not to mention all the other studios. Last year was a tougher year for content because of what the strike did. By sort of, by Q4, you started to really see the impact of the strike dissipate with a lot of new content hitting. You think about Squid Game, you think about what they did with the Tyson-Paul fight, obviously going into Christmas Day NFL, like just this year, you've got all of their major franchises coming back, Stranger Things, Wednesday, like this is a very big year, potentially what Netflix has talked about, their strongest content year in the history of the company is 2025. And so I think investors are going to be looking for how is that translating into two things. One, continued subscriber growth, and this will be the last time they report subscribers. And then what is that doing to pricing power? They haven't raised price. I think most investors are surprised that they haven't gone back to pricing, given how strong that content slate is. And I think everyone's going to be listening for any hints of how soon we see it and how substantial those pricing moves could be.
How much patience, Rich, do you have in the meantime? We're talking so much about the money they're bringing in the door, but what about the money they're putting out the door? Do you have a lot of patience when it comes to content spend?
I mean, I think the reality is everybody else in the industry is pulling back. You're seeing a substantial reduction. If you look at what Disney's strategy, they've moved much more towards movies, theatrical movies hitting Disney Plus, really carrying the day for that service versus making nearly as many series as they were a few years ago. If you look at what WBD, HBO, and Max has done, really centering on the core, HBO franchises to drive that company. So, I think against a competitive landscape where everyone else is cutting spending, Netflix putting the pedal down pretty substantially over the course of the last 6 to 9 months. And I think you start to see that in 25 and 26 in terms of what that means. That $17 billion they spent over the last couple of years, like that number is going to be higher this year. And I think grow even more in 26. And obviously they're getting into sports. They're getting into more live events to drive the advertising business. Advertising is, a business that's sort of doubling for years to come. Like there's a lot of growth drivers right now, especially against a less competitive environment. So I think if you're watching this, you own this stock, you want them investing more because it's helping drive a wider gap versus the peer group.
Let's talk about pricing and what it means for the end viewer here, because you take a look at the Bloomberg Intelligence preview, their expectation is that the content slate combined with price increases by rivals really sets the stage here for a U.S. price hike this year. Is that your view as well?
Look, we thought it would have happened end of Q4, early Q1. Obviously, we're in early Q1. So I don't know whether it's next week, next month. I would be shocked if we got to March and they hadn't announced a price increase. Again, just given the relative strength of the content and what appears to be a very, the low end price on Netflix, the advertising tier at $6.99 is an incredible discount. If you think about what it costs to get Max or, Peacock or, the pricing of Netflix for what you get content wise is pretty incredible. So that gives them a lot of flexibility, I think, to move pricing up, especially on the ad-free side. But I wouldn't be surprised if even the advertising price starts to inch up over the course of the next 12 months, just given what an incredible value it is.
Rich, how are they doing in terms of revenue from ads? In the past, we've spoken to Mark Douglas, for example, from Mountain, and he has said they could do better in that area.
Look, there is no doubt choosing Microsoft was not their best decision as a launch partner. They've been unwinding that and now going more direct with their advertising technology, working with companies like Trade Desk, Magnite, and Google's DV. So overall, Netflix is in the process of fixing some of the early mistakes. I think the good news is, and what investors should care about, is time spent on Netflix continues to grow. If anything, it's going to have a great year looking at that content slate. And so as you have content that people want, that creates substantial advertising opportunities. And what I think a lot of investors don't focus on is when you buy content or licensed content like WWE or the NFL, that is reaching advertising on that is reaching all subscribers, not just the ad-supported subscribers. And so you get a much larger reach for that advertising, which accelerates your move into ads.
We only have a minute left here, but you have a thought-provoking list of 12 questions when it comes to Netflix. And as it pertains to advertising, this one particular question affects other companies as well. At what point can they cut out third parties like Trade Desk? What do you think?
It's interesting because Trade Desk has talked about Jeff Green, who I have incredible respect for, basically has come out and said, look, if you're not named Google or Amazon, everybody is going to need people like us. They're going to need third parties to help because they don't have enough scale in CTV. My guess is Netflix believes over the course of 3 to 5 years, they can get to massive scale in advertising. But I do think it is a central question of how long do you have to pay that tax, effectively a tax for that intermediary to fulfill demand? Will Netflix ever get to the point where they have so much advertising inventory and so much demand they don't need those third parties? Because Google doesn't use them for YouTube, Amazon doesn't use them for Prime Video. Will Netflix get to that point? It is a really important question for investors that, as you mentioned, impacts people like Trade Desk and Magnite, et cetera.
All right, Rich, we got to leave it there. Really appreciate the preview ahead of Netflix earnings after the bell. That is Rich Greenfield of Lightshed Partners. Now, still ahead, the battle against bird flu. Moderna scores nearly $600 million to speed up vaccine development. Details next. This is Bloomberg. All right, it's time now for Social Climbers. The company's making waves this morning. And first up, members of the Teamsters Union have reportedly authorized a strike against Costco beginning February 1st. Unless they reach a deal with the retailer before the current contract expires on January 31st. In addition to disagreements on wages and benefits, the union said that Costco had rejected union proposals dealing with seniority pay, sick time, and safeguards against surveillance. Costco not commenting. Next up, we have Moderna being awarded nearly $600 million from the U.S. government to help the company develop a vaccine aimed at protecting people from bird flu. Since 2023, Moderna has been studying a vaccine to keep people from getting infected with the virus, which has been decimating flocks of birds throughout the nation. The outbreak is also said to be causing egg prices to spike. I think we can actually draw that direct line. Finally, Urban Outfitters is getting upgraded to a buy over at Morgan Stanley. The firm says that there is still room for valuation expansion after the stock's recent rally. The analyst also says that the company has seen impressive success at incubating new growth brands. You can see shares currently up about 7.5%. Meanwhile, quick check on markets, of course. You can see we're still higher on the S&P 500, on the NASDAQ 100, but there are some fears in Apple. Right now, that stock moving to the downside. And Matt, a lot of consternation when it comes to potential tariffs.
Yeah, absolutely. We have some new functionality on the Bloomberg terminal as well. If you type ECAN Go, then you can see U.S. imports and U.S. exports. I put in Canadian exports or U.S. exports to Canada just to show you how much we're talking about. Almost $30 billion in products per month. Check it out on the Bloomberg terminal.
Want to now bring you some breaking news as well. Scott Bessent, which is, of course, Donald Trump's nominee, President Trump's nominee for Treasury Secretary, has won Senate Finance Committee backing for the Treasury job. After more than 3 hours of hearings, the floor vote could come as soon as Thursday. After now, we have the Senate Finance Committee vote that happened this morning, of course, setting him forward on the path to becoming the nation's next Treasury Secretary. Katie.
Yeah, we'll continue to follow that one. Of course, Bessent was expected to be one of the less controversial nominees, but again, we will continue to follow that. But sticking with the Trump administration, let's talk about the potential TikTok ban. It's causing a boom for Duolingo. The company said last week that it's seen a 216% year-over-year spike in U.S.-based Mandarin learners. Americans have rushed to TikTok alternatives such as Chinese-owned social media app RedNote in recent weeks amid fears that TikTok will go dark, as it did briefly this weekend. Thrilled to say that joining us now is Luis von Ahn. He is the CEO of Duolingo. So 216%, that is enormous. But let's talk about base effects here. Was it that 5 people were learning Mandarin and now you have 15? Or what details can you give us behind that spike?
No, we do have a good number of people learning Mandarin. It's not our most popular language, but it is definitely a popular language. It's among the top 8 languages that people are learning. We did see a huge spike. It's mainly because people who are, when they thought that TikTok was going to be banned, they started trying some Chinese apps like RedNote. And as soon as they showed up, most of the things were in Chinese. So they came and wanted to learn Chinese on Duolingo because of that.
It's so ironic to me that people who are leaving TikTok, which is going to be banned because of Chinese ownership, we're simply going to other apps that were also owned by the Chinese.
Not deterred
Does
at
no
all.
one care about national security in this country?
They care about ease of access.
The TikTok
I guess Gen Z doesn't. Do you have any, by the way, Luis, do you have any data on who your biggest users are? Is it, younger people that would be more likely to use TikTok? Do you have older people using Duolingo to learn new languages? What's the average target customer look like?
Yeah, we actually have the whole range. I mean, we really have people who are learning languages. It starts at around age 7, but it goes all the way to like 100. It skews a little young, but it's mostly the average age of our users in any country is about the average age of the country minus 2. So it skews a little younger.
I'm just wondering, is it harder for someone who's like 51 to learn a foreign language?
Asking for a friend.
Especially if that person already speaks other languages. Is it more difficult than, if you're a kid learning your second language?
Yeah, so there's a few things we know. It is easier for kids. That is true. But you can 100% learn a language as an adult. And the other thing is, if you speak more language, the more languages you speak, the easier it actually gets. You may get a little confused at first, and it is harder to learn multiple languages at the same time. But once you're good at a couple, kind of the third or fourth gets easier, especially if the ones that you already know are similar. So if you know some European languages, adding another European language is definitely easier.
I mean, 51 is basically a kid, Matt Miller, so you should just start now.
I desperately need to learn Spanish.
Yeah.
But I already speak German, so when I try and learn Spanish words, I think
just got so many
reach for
words
German.
in that noggin. Luis, let's talk a little bit more about TikTok, though, because it went dark for about 15 hours this weekend. It was a pretty trying time for me. It's back online now, but we'll see, of course, what happens after these 75 days. There's a lot of uncertainty there. Are you seeing any tapering off in the interest for Mandarin now that the app is back online? And just generally, how are you thinking about TikTok, where, of course, Duolingo has a big presence?
Yeah, I mean, we're not seeing any tapering off of the Mandarin learners. They're sticking around, and that's usually because we're very good at keeping people to continue learning on the languages. In terms of TikTok for us, starting, we have a big presence in TikTok. We have, most of the videos we post go viral on TikTok, and we do so entirely organically. So it's been very good for us. But starting about a year ago, we knew that there was a danger that TikTok would get banned in the US. So we've been diversifying quite a bit. By now, most of our views are no longer from TikTok. We get more views from YouTube Shorts and from Instagram Reels.
Wow.
And so that's one thing. And then the other thing is we've also been diversifying our TikTok audience. So most of our views on TikTok are no longer from the United States. So if there was a ban, we don't think it would affect us very much in terms of our marketing. But it seems like it's unclear what's going to happen with that. It's a roller coaster.
Speaking of the roller coaster, when you look at the clients that are using Duolingo here, and of course this uptick with the potential TikTok ban, what do you know about exactly why they're learning? Is this a matter of mostly trying to be able to communicate and use social media of different forms like RedNote? Or is it a recognition here that we're still dealing with the world's second largest economy, and you have consumers who are just trying to get caught up with the changing winds of the globe?
Yeah, in general, what we see is people who are learning English, which is about half of the people who are using Duolingo, they really want to learn English. And that's an important language. It's kind of how the world does business. For the other languages, when we see spikes like this one, like the spike for Chinese, they're very related to cultural phenomena. So, for example, we saw a huge spike for people learning Korean now that Squid Game 2 just came out. Or whenever like a new show on Netflix comes out, that is, there was this one, a Swedish show called Young Royals. We saw a spike in people learning that language. So we just, we see that, and that's, I think it's quite related just to culture. It is interesting that even though Chinese is a relatively large language on Duolingo, there are more people learning Korean and Japanese. And it's because I think they have generally, at least in the United States, a lot more cultural representation.
Luis, I want to take a hard pivot here and talk a little bit about AI, because we last spoke to you in September, and we're talking about how Duolingo is integrating AI tools into the app. Of course, you have Lily, who is sort of sarcastic-looking cartoon woman. You can see her there. She looks unimpressed with me. You also have Duolingo Max that has AI-powered tools as well. But existentially, are you worried about some of these large language models that people will go to a ChatGPT, for example, to kind of just translate and maybe learn a language a little bit rather than go to Duolingo?
No, we're very, very happy with large language models and what they can allow us to do in terms of teaching. Historically, with Duolingo, we had been very good at teaching you a lot of aspects of the language, like reading or vocabulary, but we hadn't been very good at teaching you spontaneous conversation. The only way to really practice spontaneous conversation in the past was to talk to another human. But it turns out most people who are not very good at a given language don't want to talk to a stranger. And what's amazing about large language models is that they allow you to practice conversation. So this is why we launched this feature called Video Call with Lily, where you can practice your conversation with one of our characters, with Lily, who is this, emo teen that is unimpressed with you. And people love it. And it's really allowing us to practice, to help people practice conversation. We're not particularly worried about people going to learn a language with something like ChatGPT or something like that, because what we do well is we keep people interested. Turns out the hardest thing about learning something by yourself is staying motivated. Learning, you could learn a language in many ways. If you have infinite motivation, for example, you can actually learn a language by reading a book. This is possible. But most people just don't have the stamina and the motivation to do that. Whereas what we do with Duolingo is we're just very good at keeping people, hooked to learning a language.
Yeah, Matt Miller is taking notes right now. We don't have a ton of time left, but I do want to ask you, take a look at the share performance. Of course, shares rising 42% in 2024. You're close to an all-time high, your all-time high that you hit in December on shares right now. There's a lot of optimism over M&A under the second Trump administration. Is that something you might look towards?
Yeah, I mean, we're always looking at how to expand our business. I mean, we've mainly been known for teaching languages. Over the last couple of years, we now also teach math and music, and we're going to be growing those subjects. So we're generally always looking for how to expand our language, but most importantly, we're heads down, just growing our user base.
Luis, great to talk to you. We could have gone on. We all have more questions, so hopefully get you back. Luis von On there of Duolingo. Now, coming up, it is President Trump's, second day now in the Oval Office. First day of actual trading in the Trump 2.0 era. We're going to speak with Wendy Schiller of Brown University's Taubman Center for American Politics and Policy next. This is Bloomberg.
The golden age of America begins right now. Today, I will sign a series of historic executive orders. With these actions, we will begin the complete restoration of America and the revolution of common sense. I will declare a national emergency at our southern border. All illegal entry will immediately be halted, and we will begin the process of returning millions and millions of criminal aliens back to the places from which they came. The inflation crisis was caused by massive overspending and escalating energy prices, and That is why today I will also declare a national energy emergency. My proudest legacy will be that of a peacemaker and unifier.
That was President Donald Trump speaking yesterday during his inaugural address, and his comments laying the foundation for what he says will be a transformational administration. Joining us now, Wendy Schiller, director of the Taubman Institute for American Politics and Policy at Brown University. You know, we started off the show talking about what was on the minds of the C-suite in many ways, which is tariffs and the uncertainty around them. However, when you look at the executive orders and the tone of the speech, it's worth also talking very directly about immigration and here the border policy that he's pursuing and the ripple effects that's going to have across the American economy and the American people.
Well, I mean, I think he basically made sure to say criminals. I think that's been a message that's been coming from the Trump transition team for a couple of weeks now. And that's a more targeted effort. And that's one I think the American public would support. People who have been arrested but not necessarily convicted and are here undocumented. Certainly Congress is just thinking about passing a bill and passing a law that does the same thing. So that's quite different from a huge sweep of 15 million that he was talking about on the campaign trail. So these executive orders, some are very difficult to carry out. You know, you can't sort of transform the federal government in a day, but others are actually practical and can be carried out and within the scope of executive power. So what I'm looking for in all of these executive orders is where is he pushing a boundary on executive or unitary presidential power, and where is he doing what lots of other presidents have done, which is to exercise their sole authority on the first day they have the job.
I think, you know, with respect to immigration, it's important to markets, Wendy, because of the effects on the labor market. In his first term, Donald Trump deported fewer than 1 million immigrants. President Obama deported 2.5 million immigrants. Do you think Trump is really going to step up that number in his second term? And does he have the, manpower? Because he wanted to add, I think, 10,000 new employees to ICE. They have fewer than 20,000 employees now, and it seems difficult for them to recruit new members.
Well, you can recruit, but you also need budgetary authority. So you need the Congress to give you some more money. Now, presidents can move money around within departments. And Christine Noem, for example, Homeland Security, Justice Department, they could try to move people around. But in the end of the day, if you want to spend more federal dollars, you need Congress typically to give you the money and give you the permission. So we're going to have to see what kind of leeway Congress gives the president in terms of spending. We've seen, interestingly enough, that he did not impose sweeping tariffs. And that goes straight to the heart of the economy. These executive orders were full of a lot of bureaucratic language, kind of ironically, that said, well, we'll assess the situation. We'll see where we're weak. We'll see what would help our manufacturing sectors, but nothing really sweeping. And that's a big signal that, at least on the economic side, Trump isn't going to take, a lot of bold measures. And that's important. But you're absolutely right. It depends which undocumented people you're going after. And we've already seen some preemptive dismissals and layoffs in companies that have workers with uncertain status. So you're already seeing some of that happen now.
Wendy, I'm glad you brought up tariffs because that's where I wanted to go. And that's where we've actually gotten some detail, at least when it comes to Canada and Mexico. Of course, Trump saying that those 25% tariffs will come by February 1st. You take a look at the equity market, particularly when you take a look at some of the car makers, as we were talking about earlier, kind of shaking that off a little bit. I mean, is that the market saying that these are negotiating tactics? And is that your view as well?
Well, I mean, I think this harkens back to NAFTA, or now the U.S., Mexico-Canada free trade agreement that he renegotiated. And you can argue he renegotiated it pretty well in the first term. And it goes back to sort of, the advantages and disadvantages of having contiguous neighbors and having U.S. manufacturing moving to those countries. And so when you think about the goods that are coming back over, particularly from Mexico, you think, well, how many of them are U.S.-owned companies manufacturing? They used to get a special deal for the goods that they came across the border. It's called rule of origin, and they wouldn't have to pay the same kind of taxes on it. So is he trying to encourage those companies to stay in the U.S.? He failed to really effectively do that in his first term, and I don't see a lot of promise for doing that in the second term. And all of this will fall on consumers. So what we're going to look for is a 3-month, 6-month sort of lag on the consumer. Is inflation going to go up? Are prices still going to stay high? And that's going to sort of take the wind out of his sails 6 months from now. And that's, I think, what they're worried about. That's why they get a lot done now.
A little earlier, you had mentioned that you're looking at these executive orders to see where he has been pushing the line. Where might he meet congressional pushback, and where might he meet difficulty when it comes to executing some of these policies? I want to hone right in to DOGE, for example. Do you think that a lot of this is possible, especially when one of the main overseers of the project here may no longer be helping oversee the project for other political aspirations?
Sure. So now, basically, Vivek Ramaswamy yesterday, basically, well, I'm going to Ohio. I'm going to run for governor in Ohio. So that sort of magic team of Elon Musk and him, that's gone now. Departments, listen, Bill Clinton gave Al Gore the task of reinventing government. Those of us old enough to remember that, and he just did it. And that was, I think, using a couple of executive orders. So the president can reshape the federal bureaucracy, but you can't actually create a cabinet-level department without Congress. You know, George W. Bush did it with the Department of Homeland Security, but that was Congress. So, you know, there'll be an in-between, but the president can move things around, can reshape. How long Elon Musk will have patience to deal with 2.4 million civilian employees in the federal government, we're going to all wait and see.
Wendy, great to get your take on some of this. Obviously, it's a very complicated subject, so we're going to need to have you back again to talk more about it. Brown University's Wendy Schiller there. You can also find a live blog of the latest from the Trump White House on the Bloomberg terminal. Type TLIV GO on your terminal to get up-to-the-minute news on what Donald Trump is doing in terms of executive orders and so forth. This is Bloomberg.
And it's time now for the Wall Street Beat. Goldman Sachs promoting its new generation of leaders to run its major business lines. Joining us from Davos, Bloomberg's chief Wall Street correspondent, Sridhar Natarajan. You know, one thing that struck me was not just the sheer scale of these promotions here, but also the number of people added to the management committee. This is 15 people. The membership has jumped by more than 50%. I get the idea here of making the next generation rise to lead the bank. You really need new staff at the top here, but why so many?
It is kind of funny because if you go back to the early days when David Solomon took over, one of the pushes he was making, he was really keen on making sure that that management committee was trimmed down, not bloating. In this case, it's actually expanded and quite significantly, goes from about 24, 25 people to almost 40 individuals now. But the real message here, Sonali, is really about what the firm is trying to signal to the market as who is the next-gen leadership at Goldman Sachs. When you look beyond the David Solomon, John Waldron core team, the two of them and their division heads, when you look past them, who do you see on the rise? This is their big signal to the market that these dozen or so individuals will be the ones who will be carrying the torch forward at Goldman Sachs. Because when David Solomon became CEO, when you remember the initial changes, outside of trading head Ashok Varadhan, almost everyone else came up through the banking ranks like David Solomon and took on very important senior positions across the firm. Now this is much more broad-based. The investment bank is the crown jewel at Goldman Sachs. It is what the firm is known for. It is what's given the firm the pedigree and the standing in the world. And these leaders will be put atop those Wall Street engines. So these are names to watch out for many years ahead.
Sri, isn't this about at least partially retaining talent? I mean, boosting the management committee by half, adding 15 people, because you're afraid that those 15 people could get lucrative offers from competitors.
Look, is there an element of appeasement here? Sure. For anyone interested in Goldman criminology, this is a banner day. When you have this many moves, everyone's trying to figure out what it means. And that is absolutely right. It is making sure that this layer under the division heads is kept happy and is kept at the firm, that they don't look for opportunities elsewhere. And it wasn't easy to make this decision. We first started talking about it some 15 months ago and how Goldman Sachs would make these changes. They weren't really able to pull the trigger a year ago. The conversations continued for a good part of a year, and now finally we're seeing changes. Changes in terms of proper titles being given for people, positions that didn't exist being created, and of course those who didn't make the cut gently being pushed aside with vice chairman and chairman titles and whatnot, which is your typical Goldman Sachs practice.
Sure, we only have about 30 seconds left with you. Let's talk about diversity here, because I'm looking over the list of these 15. I see a lot of men.
And you can look again and again and again, and it'll be hard to find many women, because if you look at this list of 15, a few changes from last week, you can actually expand the list to some 17 names from revenue-making groups added to the management committee, and you'll only find one woman, Kim Posnet. Yes, in American politics, it might feel like we're living in a post-DEI era, but when it comes to the workforce, when the workforce at Goldman Sachs sees this list of promotions, the fact that there's only one woman who makes the cut out of some 17, 18 names, that's not going down well at the firm.
All right, Shri, fantastic reporting as always. That is Bloomberg's Shri Natarajan reporting live from Davos. Now, coming up tomorrow on Open Interest, more interviews out of Davos, including Citi's head of wealth, BlackRock CEO Larry Fink, and the CEO of Salesforce. This is Bloomberg.